Good evening, guys. Today is 14th of Jan. Let's look at the trade. As you can see here, the market yesterday clearly gapped down. The market gap down, retraced down below this low, and again it head higher and further continued selling. And you can see a clear trend line kind of liquidity over here. There might be people who might have sold here. There might be people who might have sold here. But what happened today morning on 14th of Jan is that the market gapped up, targeting all those sellers who might have entered the market, expecting the market to go still lower. All those stop losses has been hit. All those stop losses are liquidity, guys. So the market, so the market gapped up, took out those liquidity over here, and if you see today's pivot range, this is the central pivot range as the market gapped above the central pivot range. As I've told you earlier about pivots, if the market gaps way above the pivot, we should always look for bullishness and in confluence with moving averages as well. See, you can see clearly it even gapped up above the 200 moving average, and all these moving averages are in confluence. And if you try to plot the first candle fib level, the mid of the first candle, you should see if the price took support anyway between this, or you will go to 5 minute time frame and try to plot the fib level here. These are small confluences, guys, for you to trade. This is a 5 minute zone. So back to 1 minute. So I trade this 1 minute mid to 5 minute range, and along with VWAP confluence, along with moving average as well as RSI, you can see clearly that here the market gapped up, price rejection from here, and it continued further selling, but further buying pressure over here, targeting these buyers, these sellers, sorry, the market, and you can see clear window over here. Here the price has not been traded here to here. This is a clear window. The price zone between this has not been traded, so the market has to go higher. This is the last up move before the down move with that structure towards the downside, and here it's an order block. You can see price went reached the order block, faced some kind of rejection, took support from this VWAP and 21 moving average, and broke the structure high. This is break of structure. But this break of structure is not with pure a bullish candles, guys. Like we should expect a break of structure like this, the three candle structure with a fair value gap. But this break of structure is just a grab of liquidity only, this liquidity. And the price again dramatically fell down. You can see clearly that this break of structure, like even if you plot the last down move before the up move, which broke, you can see here that this liquidity over here, this is a liquidity, guys, the fair value gap. This fair value gap has been take swept and it head higher. This is the fair value gap. This fair value gap, if the market is really bullish and expecting the market to head higher, the three candle structure over here, which broke structure, this high or this high, should break the structure with a fair value gap, guys. Like you expect the market to form a candle like this and another candle like this with a fair value gap and another candle like this. So a three candle structure with a fair value gap and price not yet retested this fair value gap. This is what we are expecting, guys. If the market is really bullish, right? This is how the market will form, taking support from this VWAP as well as the 21 or the 9 moving average. But what happened is that you can see clearly like this trend line liquidity over here. This liquidity is usually kind of swept off. So the market, what happened is that it reached the midway between this, I guess, between this fair value gap. You can see it's reached almost like above that and broke this structure towards the downside. And you can mark this as chalk also. But here there is no clear break of structure, but you can clear like this is a clear break of structure. So you might even mark this as a fair value gap, the order block level and a fair value gap here. This is a clear break of structure. This is 1 minute order block. You could have, if you have seen price like coming back here, this rejection candle, and after this this bearish candle, the price couldn't move further down, and followed by another bullish candle, you could have entered long position over here, expecting the market to head higher, at least to sweep the further swing structure. I think this high, but it actually didn't go. What happened? You could have just after this impulsive move, you could have tried your stop loss midway between this. I think this is not a good risk to reward ratio since your stop loss has been hit. But this entry is really good, guys. After this breakdown, this retest, and this bullish engulfing candle from the 9 moving average, it clearly signifies that this market is kind of very bullish. But what happened is that it broke structure towards the downside. This order block, as soon as it broke, the marker consolidated around this demand zone. I think a lot of orders, market participants, this is called as an accumulation zone. Here you can see clearly price got it accumulated, and this is the manipulation zone, guys. Here you can see one sort of accumulation, manipulation, and distribution. Again, it consolidated manipulation as well as distribution. This is quite common in Indian markets where the price consolidates, manipulates, and initiates a lot of sellers to enter the market. But what happened is that market again recovers back and try to head towards its original direction. This is very common in Bank Nifty as well as in Nifty. But see, you can see the price consolidated. Here you can see clear bearish trendline liquidity. So after seeing this and breaking this candle towards the downside, a lot of this structure, clear break of structure towards the downside. You can see the last up move you could have blocked this order block as well. This is 1 minute order block. But what we need confluence here is, guys, one thing you need to always remember is the 100 as well as the 200 moving average. You should always trade in the direction of the 100 as well as the 200 moving average. You can see clearly the 100 as well as the 200 moving average. Here clearly you see the price rejection from the 200 moving average. And you see after this rejection, you could have easily taken put position. Here you can see 200 as well as 100 moving average. Here you could have entered short. Here you could have entered short. Here you could have entered short, keeping your stop loss just above this peak. And here is kind of manipulation. See, after this breakout this candle, the last sell-off candle, after that it followed by bearishness. Here also you can see some kind of manipulation, uh, initiating buyers to enter the market after this bullish momentum. But after this bullish momentum, you should always look for retracement, guys. So when the retracement is like sharp downfall after the break of structure like this, I think that's not a real retracement, guys. After this break of structure, you should always like price consolidate and reach the order block level, and suddenly after reaching it should show some reaction towards the upside. But what happened here is that you can see the clear break of all the moving average. This swing structure to here, it broke all the moving averages, and you can see liquidity over here. You could have targeted those lows, right? Always here, you can see rejection from VWAP, 200 moving average. You should always trade in the direction of 200 moving average, guys. Here you can see clearly in 1 minute time frames only, you can see that 200 moving average confluences. But here I will tell you that also. And again, you can see clearly that the market broke the structure and finally retraced back. This retracement is there, guys. You can see clearly that this channel pattern. I remember, like, I told you earlier in previously in my older videos that this kind of channel pattern, if it's around 1023, let's look at premium chart at 1023, guys. This is the spot chart. So you see this breakout structure and this 1023 to 1025. You can see this. This is Sensex. What about Bank Nifty? So wait a second, guys. Let's look at Bank Nifty. This is Bank Nifty. So let's look at some. Here you can see at 1023, guys. You can see this kind of consolidation. The pattern over here, you can see clearly. At the same time, here you can see this channel formation after price reach the 200 as well as the 100 moving average. There was upward momentum and this channel pattern over here as well. You see if you clone it, this, so you can't do this. So this channel pattern over here. And here you can see at the same time frames in PE premiums. Mm, you can see this upward rejection. Here it seems to be bullish only, but here also you can see the clear chat rejection of price from 9 as well as the 21 moving average. But this channel pattern rise after this bullishness is clearly signifies that the market is really bullish. If the market is bearish, the price would have faced some sort of resistance over the 50 level. Here you can see clearly this 50 level. This is the 50. This channel pattern also is happening there. Uh, you can understand that after this accumulation, the market is forming manipulation over here, keeping your stop loss just below this pip, and you could have targeted this swing structure high or this swing structure high as well, expecting the market to go further high also. But if you have entered the market here, keeping your stop loss just below this bullish candle or below this low or below the previous candle high, you could have targeted this high, or you could have tried your stop loss all the way to this high, or you could have just tried your trade, guys. Or if you try to draw the fib extension level here from the common point between this as well as this, you can clearly see the market went all the way to 3.618 level, guys. You could have just tried your stop loss. Once it crosses the 21 moving average, you could have exited your position. As long as the market is trading above the 9 as well as the 21 moving average, you could have just hold on to your trade. So you could have targeted till here, like all the way till here. But coming to smart money concepts, like how you could have taken based on smart money concept is that, see clearly this 1 minute order block has been broken and the price had formed a chalk here now. So this fib also is being broken out. So after this channel pattern, the price head higher. So the last down move before the up move, which broke structure. If you try to plot the fib retracement level, you can see the clear zone, guys. Here, the 0.38 level. You can see price usually takes support from 0.38 level or the fib level. Could have even drawn the fib 50 level or the 0.38 level, and you could have drawn the fib extension level as well. The fib extension level, you could have targeted the 1.618 level or the midway between this. 1.618 is the golden level, guys, where you can exit your position. This is another confluence to add on to your position, guys, when you are on a right trade. So some people might have entered their trade here, keeping your stop loss here. Some people can add your positions to this trade when you see this kind of retracement, expecting the market to be bullish. Uh, I think it takes really so much of experience to add to your positions when you're in your right direction. I think that confluence comes through a lot of practice. And as the price reached all the way to 3.68 level, you can see the price faced some kind of rejection. So if you try to plot here, you can see the last up move before the down move. So you can consider this to be as an order block. This one to be an order block. You can see clearly the price broke this structure, but what happened is that the market broke the structure forming chalk, guys. Here you can see clearly the market formed chalk here. So, and you can plot the fib level here, the last up move before the down move. This is the, you can plot the 1 minute order block here. So clearly the price faced some kind of rejection here. If you try to put the fib extension levels over here, VWAP level also, you can see clearly that the market head high took support from the 50 moving average, but it faced rejection as soon as it reached this selling zone and it broke structure. This bearish candle you have seen, guys. This bearish candle broke structure, the VWAP structure, the anchor VWAP structure, the 21 as well as the 9 moving average towards the downside. And you can see this retracement and this dodgy candle which faced rejection from the VWAP as well as the 21 as well as the 9 moving average. Looking at this candle and price rejection from this zone, you could have easily entered your short position here, expecting keeping your stop loss just above this VWAP zone and trying to draw the fib extension levels common point as swing structures are all black. So I'm trying to plot. You could have trial till the 100% move, the 1.68 level, or you could have exceed till tried your stop loss till the 2.618 level, or as long as the market crossed the 21 moving average, you could have created your position, or you could have also entered this swing. You can say this is the swing order block, the last swing order block. You could have exited your position all the way till here also. And you can see another order block over here as well. You could have also exited here also. So you can see clearly the market is bearish, trading below the 9 as well as the 21 moving average. And this is one good trade, guys, which where you could have taken your trade. Here you can see the day fib level. Here the price broke down, took support from the 200 moving average, and faced rejection from the day's VWAP level. You see the day VWAP level, it faced rejection. Again, it continued further selling downwards. And what happened here after it reaches this big order block is that as long as the price staying above the opening candles mid and the 5 minute zones range, you should always consider yourself to be bullish, guys. So it's like trading above this zone. So after seeing this bullish candle, guys, look at this bullish candle over here. This bullish candle over here engulfing like the previous one, two, three, four candles, guys. It clearly engulfed the previous four candles, signifying that the markets have entered the market, expect pushing, trying to push the market upwards. But what here you can see clearly is that after this bullish candle, you can see the retracement, guys. This retracement of the candle was below the 50 level only, below the zero point 0.5 of the first candle. So it's below zero point 0.5 level of the first candle. And after this retracement, you could have kept your stop loss like taking long position over here and keeping your stop loss just below this and expecting this swing high structure or this swing high or minimum of this swing or this swing, or if you can see clearly this also is a pure swing structure, guys. You could have easily targeted this high, or for better confluence you could have waited for SOP to form here. This is one of the best entry, guys. You can see the clear pattern formation over here. These two candles, like this candle, and rejection of price and this bullish candle breaking the 9 as well as the 21 moving average. This solid bullish candle. After this candle, also you could have entered your long position. But based on smart money concepts, you should always wait for chalk formation. So the previous chalk has been formed, and the common point between this to this, you will always look for retracement to 0.38 level, 0.38 level, or the 50 level, the golden zone ratio. But here you can see, here you can, by placing the anchor VWAP here also, you can see clearly the price took support from here and rejection of price from the 9 as well as the 21 and the VWAP level here, expecting the market to go higher, and the 0.38 level. Here you can see you could have even entered a long position after this candle doji formation, keeping your stop loss just below this VWAP zone and targeting this swing high structure or this VWAP zone levels. This two day VWAP, this swing high structure VWAP level, anchor VWAP level. So let's keep it like in small size. The anchor VWAP level, but it's better to target this swing. But after this break of structure, you can see clearly again the market broke this high as well. Break of structure. You see clearly the market broke with a bullish momentum, showing a fair value gap here. But what happened is that if you try to draw the fib level over here, you can see there was consolidation of price. Fib 50. You can see there is consolidation between this zone and this zone. The 200 moving average as well as the VWAP of the swing low, the VWAP level here, and the swing high VWAP, anchor VWAP level. You see there is a consolidation sideways movement. You could have entered your long position here after this bearish candle, and after this final sell-off candle, you can see that the market halted between midway. It couldn't cross the anchor VWAP level here. It couldn't cross, and it couldn't even cross the 200 moving average. And keeping your stop loss just below this pip and below this zone, you could have easily targeted this swing high. This is another swing structure. This high also. This is another confluence for you to take on trade. This is one setup. And you can see clearly, guys, here the price consolidated in a trend line fashion. This is a clear trend line liquidity. And the market clearly bullish took support from the 50 moving average and clearly broke the structure high over here, this high here, this break of structure, and this liquidity. You see this liquidity support taken, the price couldn't cross. And after seeing this solid Marabuzu candle, breaking the two VWAP levels, the day VWAP level, the swing high anchor VWAP level, the 21 moving average, the 9 moving average, all these structures with the one single candle, it broke towards the upside. So after this break of structure, you could have entered long position, keeping your stop loss just below this candle itself and targeting this high or this high. Or you could have just tried your stop loss as long as the market crossed the 21 moving average. So here you can see this bearish candle clearly crossed, or this candle clearly crossed the 21 moving average. So you could have, based on your risk to reward ratio, you could have clearly targeted, or you could have found any order blocks towards the opposite side. Here is one same structure. Here there is a clear order block, guys. So if you try to draw the extension rules from here, yeah, you can see this is a clear order block. The last up move before the down move, along with fair value gap as well. So if you try to draw the 1 minute order block here, and it respected the 50 level over here as well, and it continued further selling. So if you, this is a pure order block, so you can see clearly this is 1 minute order block, and you can see clearly that the price reached all the way, touched the 1 minute order block, and continued further selling. If you had plotted this 1 minute order block, you could have even entered short position after this rejection of price and this uh, liquidity kind of pattern. I will show you what I was talking about. You see this kind of liquidity, guys. You see this kind of liquidity, this channel pattern after breaking this structure low towards the downside. You see this channel pattern after breaking this structure low. You see after this, it reached the 1 minute order block. You could have easily entered short position, guys. Here only, keeping your stop loss just above this, and you could have targeted this low only, this Marabuza candles low, because there is no clear swing structure over here. You could continue all the way here, guys, or this zone candle. This is another clear channel, and here you can see some kind of manipulation and further buying pressure. This is quite random only because what we could have expected is that the market might continue further selling over here. But what happened is that buyers entered the market as it couldn't cross this low, guys. Here you can see clear buyers sitting over here. I think these buyers are very strong buyers. As long as the market stays above this high, this is 1 minute order block, guys. Again, if you are smart enough, what I'm saying is that after price face some kind of rejection from here, 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 and this solid bearish candle, the sellers were not able to continue further selling, and you could have entered long position because here you can see a solid Marubozu candle keeping your stop loss just below this zone and targeting this swing high, or you could even hold for tomorrow as well because the market might gap down a little bit. Or if the market is clearly bullish tomorrow, the market will gap up another 200 to 300 points tomorrow. Or if the market is targeting those buyers who might have entered this market, so the market might gap down here, take support again from this level and head higher, guys. Or it may take support midway between this level as well. So if you try to draw the retracement, it can go all the way midway between this zone. Yeah, guys, you can see clearly that you could have traded the this 1, 2, 3, add on to your position 4, 5, 6, 7, 8. Look at this, guys. You could have taken 8 crazy trades. I think what I'm teaching is kind of helpful for you. I hope my knowledge kind of be helpful towards you taking your trade decisions. But let's look at the premium chart, guys. For this, here we saw the premium chart, but here at around 11:30. So at around 11:30, you see this rejection, this channel formation, and this rejection of price over here. So if you're trading towards the put side, 11:30, 11:23, 11:23. Yeah, you can see clearly, guys. Here, look at this, guys. This solid bullish candle towards the upside, which engulfed this candle at 11:25. Here you can see at 11:25. Here it formed a dodgy candle, guys. Rejection of price from this zone. You remember? But here you can see in premium chart a solid bullish candle, guys. Engulfing candle. Here you can see clearly what is happening over here. See clearly you can see. This is a solid Marabuzo candle. You could have entered here, guys. Long position in put premium, keeping a stop loss just below this, and after this solid candle formation and targeted all the way high here, guys. This swing structure here. You could have targeted here as well. It's like 160 points captured, guys. 160 points. One trade is enough, guys. It's done for your day. And look at this also, like at around 12:34. Looking at 12:34 towards the CE side. You see, guys, this 12:34. You see this solid candle. This solid candle over here. See, you see the bearish breakdown and price taking support from this zone, moving higher. But what happened is further rejection of price over here and further bullishness. But what here you can see is that the market gapped above the R1 level. At this time, if you might have seen my videos, I told you that if the market gaps above the R1 level, the market will retrace back to R1 level and find support at R1 level. Here you can see both R1 as well as the pivot levels are lying close to each other. You can see another confluence over here as the market is bullish over here. And this retracement we could have targeted all the way to this high, and you can see another breakdown of this candle again followed by equal size bullish candle, and this at around 11:51. This candle guys at 11:51 also you could have taken your trade here also in premium charts. Like looking at this also you could have taken your trade. You could have tried as long as it passes the 21 moving average or somewhere between this. It's it's a good 200 point move as well. So I hope you're getting what I'm understanding. After that, you can see this demand zone over here, which has been respected, but here it further moved downwards. But here you see this demand zone, but in spot chart now, this kind of zone is being respected. So when the price reached here, you can could have also taken long position over here as well, or you could have added on to your position here also on this retracement also. This is what I am telling you guys. What positions, what trade you should actually take on. This is about Bank Nifty, guys. I hope this knowledge, what I'm sharing, is kind of helpful for you. Um, and I would like to upload Nifty as well. So I hope you like, share, and comment. And please share with your friends who are trading so they can be helpful for them as well. Thank you, guys.